Islamic banks are increasingly incorporating sustainability frameworks like ESG and aligning their operation with the Sustainable Development Goals, providing practical examples of implementing the theoretical principles of Islamic moral economy. These initiatives reflect the values of the stewardship balance, or we call it mizan, and justice, adala, which underpin both Islamic finance and SDGs. In this section, we shall explore 3 comprehensive case studies to elaborate this: Al Baraka Banking Group, Dubai Islamic Bank, and Bank Islamic Malaysia Berhad. For instance, Al Baraka Banking Group has made substantial steps towards sustainable development, demonstrating its commitment to the SDGs. The bank has strategically aligned its financial products and services to address key SDGs, including SDG 1, no poverty, SDG 2, zero hunger, SDG 7, affordable and clean energy, and SDG 13, climate action. A notable example is Al Baraka's microfinance facility, which provides microcredit facilities to underserved entrepreneurs and small business owners. It has supported more than 600,000 beneficiaries in Egypt alone, out of which around 68% are women. This initiative empowers individuals to achieve economic independence, significantly contributing to poverty alleviation, SDG 1, and promoting justice and equitable opportunities for all, SDG 5. Another example is Sudan, where the bank's microfinance programs have financed thousands of small businesses, enhancing livelihoods in marginalized communities. To tackle food insecurity and promote sustainable agricultural practices, SDG 2, Al Baraka offers specialized agricultural financing products. In Pakistan, the bank supports small-scale farmers by funding innovative irrigation systems, organic farming, and crop diversification projects. These efforts enhance food security while boosting rural economic development. The bank even has more than 30 designated branches for agricultural financing in Pakistan. The bank employs various Islamic financing models to offer diverse agri-finance products, supporting both working capital and long-term needs of farmers. This includes financing for farm machinery, solar-powered tube wells, crop inputs, and livestock purchases. By providing targeted solutions, the bank enhances productivity and promotes sustainability in Pakistan's agricultural sector. In alignment with SDG 7 and SDG 13, Al Baraka actively invests in renewable energy projects across its markets. The bank has financed solar energy installation in Jordan and wind farms in Turkey, providing clean energy solutions to underserved areas while reducing carbon emissions. For example, its partnership with regional energy companies has enabled the installation of solar-powered water pumps in rural communities, addressing both energy access and climate resilience. Al Baraka Green is a financing product that enables the client to buy green energy products and solar energy heating systems. The bank offers to individuals and entrepreneurs Sharia-compliant products to invest in solar energy, reducing their monthly bills and achieving savings. Al Baraka's commitment to sustainability is further underscored by its annual Sustainability and Social Responsibility Report, which details measurable impact and adherence to Sharia principles. The bank integrates environmental, social, and governance factors into its operations, ensuring its sustainability initiatives align with ethical values and global best practices. Another example is Dubai Islamic Bank, which through targeted programs and strategic investments demonstrated a commitment to fostering inclusivity, environmental stewardship, and sustainable economic growth while adhering to Sharia principles. A standout initiative is DIB's funding program for women entrepreneurs, which directly address SDG 5. These programs provide financial support and business development resources to empower women, particularly those from marginalized communities, to establish and grow their businesses. This is not only promotes gender inclusivity, but also strengthens the economic participation and resilience in underserved sectors. Accelerate Her, a 3-month accelerator program for women, organized in partnership with DIFC, includes mentorship, workshop, and networking opportunities for women entrepreneurs. In line with SDG 11, Sustainable Cities and Communities, and SDG 12, Responsible Consumption and Production, DIB has actively invested in energy-efficient infrastructure and renewable energy projects. For example, the bank has financed green building projects across the UAE, ensuring compliance with leadership in energy and environmental design standards, which minimize environmental impact while optimizing energy usage. DIB has also supported large-scale solar energy projects, contributing to the UAE's national target of achieving 50% clean energy by 2050. In 2023, DIB unveiled its Nest suite of financial products tailored to empower customers to invest in green homes, as well as ancillary finance for solar panels and sustainable construction materials. DIB provides more than $900 million of sustainable and green corporate financing and more than $170 million green vehicle financing and more than $80 million in green building financing. DIB's commitment to sustainability extends to its sustainability reporting framework, which integrates environmental, social, and governance principles. The bank's sustainability report provides stakeholders with a transparent insight into its contributions towards sustainability goals, including measurable impact of its green financing initiatives. This ensures accountability and aligns DIB's practices with the global best practices in ethical and sustainable finance. In Malaysia, Bank Islam Malaysia Berhad has emerged as an architect in sustainable finance, particularly through its innovative introduction of sustainable sukuk. These Sharia-compliant investment instruments are specifically designed to fund projects in critical areas such as green infrastructure, renewable energy, healthcare, and education. By leveraging sukuk for sustainable development, the bank addresses pressing global challenges while adhering to Islamic ethical principles. For instance, Bank Islam has financed solar energy projects and other renewable energy initiatives, contributing to Malaysia's commitment to reducing carbon emissions and advancing SDG 7, affordable and clean energy, and SDG 13, climate action. The bank has financed construction of 30 megawatt solar power plant in Perak. In the healthcare sector, the proceeds from sustainable sukuk have been allocated to the construction and upgrading of hospitals, improving access to quality medical care, and advancing SDG 3, good health and well-being. During COVID pandemic, the bank extended around 1 billion Malaysian ringgit to healthcare professionals. Similarly, investments in education infrastructure align with SDG 4, quality education, promoting inclusive and equitable learning opportunities across Malaysia. The initiatives of these banks exemplify the operationalization of theoreticals like Maqasid Sharia and Mizan, which emphasize balance, justice, and the collective well-being of all stakeholders. By embedding these principles into their financial products, Islamic banks ensure that their operations foster economic growth while preserving environmental and social harmony.